Allora, ragazzi, prima di iniziare ho tre cose da dirvi. Uno, ho aperto Telegram dove farò da sala segnali totalmente gratuita finché non raggiungo il 10% di profitto, dopodiché diventerà a pagamento, però per il momento è completamente gratuita, potete vedere i miei ragionamenti, i miei trade, cosa ragiono dietro a un trade, trovate il link in descrizione e nel primo commento. Due, ti vedo, non hai ancora lasciato like, mi fai schifo, fai proprio schifo, vergognati. Quindi lascia like e iscriviti perché sennò prenderai stop loss. 3. Solamente i veri fan hanno guardato il precedente video, il best of ottobre, mi avete spezzato il cuore, però non definitevi i miei fan se non guardate il best of ottobre, tutto qua. Oggi andremo a vedere la strategia di Andrea Cimi, come, cioè, quella che l'ha fatto diventare fan di 150.000 dollari con questa strategia, scrive Stupid Easy, veramente stupidamente semplice. Cimi, Big Shad, anche lui. Vediamo, una cosa, spero, ora valuterò un attimo al volo nel mentre che cliccherò su apri il video, se effettivamente, non lo so ragazzi, metterlo con i sottotitoli oppure guardare la traduzione automatica.
I got funded 100
Ok, lo guardiamo con i sottotitoli, ve li metto in italiano perché sennò ragazzi, giustamente molti di voi non conoscono l'inglese. E vediamo come Cimi è diventato funded di 150.000 dollari con questa strategia semplice. Possiamo partire?
Ho ottenuto un finanziamento.
No, no. Scusate, non... Mamma mia, oh. Questo è il bello della diretta, ragazzi. Voi direte, Dani, perché non tagli il video? Così è più piacevole da guardare. No, non ci voglio. Non c'è l'italiano. Non lo so, Jimmy, ci siamo dimenticati... Ah, ok, vedi.
I got funded $150,000 with a futures prop firm, thanks to two order flow patterns that I will explain you today. And I recorded the entire process, from the development and validation of my edge hypothesis to every single trade that I took that allowed me to pass that prop firm challenge. You'll also see how, even though I was profitable and almost close to passing the challenge, because of some stupid mistake, I had to remake the challenge all over again. Not once, but twice. Hence why I got tired of trying prop firm challenges, and I am now trading all in my personal capital, which also I'll show you the performance of the last month and what's my plan for the next year trading. Let's quickly go through the strategies that I have used. Number one, a stop run strategy. Number two, an iceberg strategy. And then an order flow divergence strategy. There were only a couple of trades where I used this one, to be honest, and this is more discretionary. But these two are very mechanical instead. The stop run strategy, I'm basically waiting to see with order flow if above some highs there's actually some stop orders, and with order flow actually see if it's real. You've probably seen a lot of ICT or SMC trader trying to do the same thing, and what they will do is they will wait for the breakout, wait for a test on probably a fair value gap, and then trade this to the downside for the entirety of the session. But most of the times when that happens, it's during the New York session, and during these phases in the New York session, there's no stop run. There's actually absorptions, which are very different patterns that requires a very different trading style.
Scusate, facciamo così, va. Mettiamolo un po' più in qua. Top.
The stop runs I've traded only happen in the ES in the London session. It's a low liquidity pattern that specifically happens during the London session when there's low liquidity. And the edge that I found is, let's say there's a high over here. We expect up above here to have buy stops. And when price is reaching that level, there's going to be, as always, sell limits above here. These are the pending orders that we can see in the order book. And below here, we have buy limits, right? This is how order flow works. You've probably seen some of my videos about this. And when a stop run happens, you see all of these market orders start entering the market. And they are matched with these sellers and they disappear. They are matched with these sellers and they disappear. They match with these sellers and they disappear, and so on and so forth. And they basically clear the book. That's why we call this also, this pattern in order flow, we call it book sweeping. And when that happens, your classic green candle forms. Now the current price is here. And of course you would still have more sell limits above here, all the market makers at the next levels of price. These buy limits will still be here. And for a very small time frame, there's a gap in the book. All over here, there's no liquidity. There should be these guys, buy limit. But it can take some time before the book gets filled again with buy orders. So the path of least resistance is this one. So it's a very short-term trade. I'm not trying to look for a session reversal. I'm just taking advantage of an order flow, very short-term order flow HFT level pattern. So when I see that this is a confirmed stop run, I've developed an indicator that basically tells that to me based on order flow data, and I simply sell here. I don't wait for a breakout and a test and go down for the whole session. That's not the point of the stop run. So that's the first setup. The second setup is an iceberg strategy that I've explained in this video. And basically what I want to see here in the iceberg strategy is price trying to kind of push on a certain level on a very specific price tick. And I want to see from order flow on this area, buyers getting absorbed on a single tick. That means that in the book, there is someone who is constantly reloading and reloading and reloading contracts. So if I see that from order flow, I'm going to sell to earn a couple ticks, front run this huge trader, maybe a couple times every time it bounces. And at some point I expect a stop loss, because what normally happens after iceberg orders is this phase called momentum ignition. And so I basically sell one tick under the iceberg and cover myself with a stop loss one tick above. And that's it. Very simple strategy. So with this one, I've observed it so many times that I did not need a thorough backtest, also because they're pretty rare, as I also trade these during the London session in the ES. Because for example, a good iceberg could have, I don't know, 2,000 to 3,000 contracts on a single tick, and that is an anomaly in the London session. Your average 1 minute candle in the ES during the London session may have 200, 300 contracts per minute. When you have on a single level a lot of contracts, that's an anomaly in the London session. But in the New York session, icebergs like these are completely ran through like a hot blade through butter. 3,000 contracts are nothing in a 1 minute candle during the cash session in the ES. But before I show you all of the data analysis that I have done in my backtest and what ultimately was the final strategy after all the fitting and optimization, let me walk you through an example. So this is an example of a stop run. We've probably went below some lows over here, and there was this huge and very fast order flow spike. I got my indicator here that also tells me how many contracts I should trade. And right below here in this area, you can see some stats, some data, some value for the order flow of each candle. On the first layer, you have the total volume, and then you have some delta values. And what I want to see is exactly this, a huge spike in volume, very high volume compared to the previous one. So I want to see an increase in volume, a really high delta. Likely this number should be at least 1/3 of this one. So I want to have at least 1/3 clear aggression. And then I simply buy when this candle closes. My stop loss is slightly below here, and my target is the beginning of the stop run. So I would buy here, take this retracement, super easy, super mechanical. This is another example of a bullish stop run. I get my indicator here that tells me we have an increase in volume, we have an increase in delta. I sell on the top, stop loss slightly above, and then ultimately price reabsorbs the path of least resistance. This is an example of the iceberg instead, where you can see here there's a lot of volume absorbed on the top of the candle. So what I would do as soon as I have this indication, which is again a proprietary indicator we've developed for deep charts, which basically analyzes volume clusters, which by the way we're releasing very soon. I guess I'm not sure when this is going to be published, but if you want to join, we're almost there. Click the link in the description to save your spot for the launch. You get a free order flow masterclass and some other super cool free stuff. So what I would do here is I would sell right here, earn a couple ticks. Then as soon as price gets back here, sell again. I would probably get stopped out here, maybe with a little bit of slippage as well. So you have to kind of be careful with these setups for the risk. Also here, we had a clear example of 75 absorbed here, 165, huge imbalance, point of control right on top. Sell over here, take a couple ticks. Then we test it again, take a couple ticks again, and then we completely ran it through. So my goal here is to take 1, 2, maybe 3 trades and then get the fuck out. So for the stop run version of the strategy, this was a journal that I filled out partly by myself, partly with some friends that helped me out with this, where I simply gathered data. I gathered a huge amount of data, around 349 trades as a sample. We did this manually. That's crazy. I specifically wanted to see how was the increase in the volume activity, how big was the candle, how was the delta, if it went to TP, what was the maximum adverse excursion, and I tried it with 3 different types of take profits. So I went through all of the data for, let's say, a full year, I think, or so. And then I started analyzing this data. And I found out, for example, that it was better to choose stop runs that had at least a certain amount of volume, so that had a clear spike in volume. It has to be an anomaly that I can capitalize on. So I started putting a filter of all of the stop runs above 1,300 contracts. Before I had a 48%/53% win rate, depending on the target. Now I started having a 53% win rate to 55% win rate. So the results started improving. And then I also saw that the closest I got to the New York session, the less they started working. So I tried to just put a filter on, maybe let's take them before 7 a.m. New York time. And also here I found a clear improvement in the statistics. So I joined these two filters. So then I was looking at short stop runs as well. I did the exact same thing, the exact same filters at the stop runs that specifically swept some very important highs or lows. And the results of these were absolutely phenomenal. 80% win rate. So from this fitting phase, I had the final optimized version of the strategy that led me to this profit and loss, a win rate of 66%, which is decent. And I got all the data I needed to then start forward testing this strategy with a prop firm account. And with a prop firm account, you have to be really low on risk. So I decided to only risk, on average, 0.20% of the account. Super conservative risk. I did not approach this as I have to make money, I have to pass the prop firm. I only approached this as I want to see if this strategy is working in the real markets. Because after all of this backtesting, that is normally what you do. You do an in-sample test, you do data analysis, you fit it, you optimize it, and then you put it in the real market to see if the edge is still present and for how long. This was the first trade. It signaled me as a stop run, but it went to stop loss, and then another stop run was formed and I traded that one as well. And there was also some clear absorption over here. So it was kind of an overlap between the two trades. And also here, after being stopped out, I sold exactly the top of the candle and then I took most of the profit out here and I tried to let the position run a little bit more and targeting the VWAP. And slowly but surely, I'm not sure we got to that point, but as you can see here, yeah, we went up and took that high. So we took out an important high that we did not took out in the first stop run. So my mistake was I kind of opened it too early. I should have waited for the stop run that actually swept the high. And I got stopped out at break even. I managed to make a little profit to pay for my stop loss, but I think I ended that day at a loss of $265. As you can see, the broker is one up, which is the prop firm I was using at that time. Then this was a iceberg setup that happened right after this stop run, actually. I can see it now. So we got the stop run happening. I took a profit from that. An iceberg started forming here. 283 contracts, 75 contracts. So I sold 15 contracts, stopped right above. First target here, and then I tried to place another target slightly below. Let's see what happened. Yep, the first setup went to target. So now we are officially in profit on the same account. And yes, we did indeed go to profit and close that day with a $500. And now we're here with another trade that was about to happen, which was this stop run. This was also a mistake because normally I don't trade beginning of impulses. I only trade an exhaustion phase. So this was also a mistake that I shouldn't have traded. It was not following the strategy and it actually went to stop loss. You see, like it should have been a stop run that I've opened maybe here. I did not have a stop run on top because stop run is supposed to be an exhaustion move, but I opened simply an increasing volume due to a directional breakout. So that was clearly a mistake. And I paid for that mistake a beautiful $800. So not a good start. This was a stop run. It was signaled as a stop run at least, and I got almost stopped out. There was another small stop run right below here. Got almost stopped out twice, and eventually I got to profit with $700 in the bank. And actually at that point in time, that stop run was the end of an impulse that then generated a huge move down. So this was the stop run we took. And after that, it would just simply melted down for the whole day. So if I even just left one contract open, it would have been awesome. But this thing does not happen that often, I would say. But yes, we closed that day at $700 in profit. This is an iceberg setup that I took the same day. I qualified it both with a heat map and with the footprint chart. I've seen this, and this is likely a mistake because it looks like this is New York session, and this is not a trade that I was supposed to be taking during the New York session. And then I think I got stopped out massively. Yep, there you go. Got stopped out and basically cleared the profit for that day due to a rookie mistake. Then this one happened, traded from the top to the close of the candle, 10 contracts, and that day we profited around $825. On that same day, we've opened another trade during the New York session. This is the order flow divergence, where I basically waited for an absorption phase at the bottoms, where you can see a lot of volume being traded at the bottoms of the candle, and then a phase of initiative, and that's where I opened my trade and probably got stopped out, I think. Yep, I got stopped out, but this was a clear liquidation point. So I think I decided to re-enter the trade because I officially got the divergence I was talking about. So this is a CVD divergence where I can see that on this leg of price, there was not enough participation, not enough delta compared to this one over here. So this divergence made me pull the trigger on another absorption that happened below here, sort of a failed auction. Normally here I wait for a clear initiative, so a candle with a high delta, and there you have it. We had the candle with the high delta, 7,000 contracts, and there we go. We have more initiative. We're also on the second standard deviation of the VWAP, which is normally where a lot of institutional trading goes on. Then I trail my stop loss and eventually gets taken. And at this point, I think market started reversing very aggressively. So I decided to close the trade. There you go. $975.
Ragazzi, scusatemi se sono poco commentatore, però mi sta prendendo particolarmente.
For the day. Moving on to the next session, we had, I think, another stop run. So I sold here. Besides from losing in commission, we're losing $500 more or less, and we get stopped out. And then we get another stop run that I probably executed on, eventually got to target. So we kind of mitigated some of the loss that we took before. And then I let it run a little bit and eventually got, I think my break-even got taken, minus $274 for that morning. Now we have another trade taken with the divergence idea, where I think the divergence happened here between these two highs. And as soon as I saw a very intense, aggressive candles on a standard deviation, I decided to execute on this trade. So this was a New York session trade. I think it almost got to break even. It came back, it retraced, and I closed the trade at break even. Moving on to the next trade, we had a stop run here, $95 in commission every single time for one up. Thank you very much. This is a qualified stop run. We sold around here. We're waiting for price to reach our target. And I think slightly after it almost touches our stop loss, it eventually runs around there a little bit and then it goes to profit. Yep. And we took profit right there, but not with all the contracts. I think we've left one contract open to see if we could reach the VWAP this time, and then eventually moved our stop to break even. And we closed that day at $600 of profit. But same concept, stop run, shorting, taking most of the profit out, and maybe leaving some for the VWAP if you're feeling generous. This is, I think, a trade taken on the same day. We're waiting for the New York session open. This was an opening session setup, of course. Looking for a divergence. We can see price pushing up, but delta going down. So all of these sellers are being absorbed. And so we just wait for this confirmation candle. We want both an absorption at the top of this candle and an initiative, and we eventually got stopped out in this position. Then we've opened another trade. This was a very bad mistake. Do you see what I'm doing here? I basically bought a stop run that I should have sold. That is absolutely embarrassing. It was a perfectly good stop run. I executed perfectly, but I literally clicked buy instead of sell. That is embarrassing. But hey, these things happen. I even moved my... Oh God. And then we reached take profit, which is our stop loss. And I was so happy. Yes. And then then actually I lost money. But this was a perfectly good setup. So do you see, even though there were some mistakes, I managed to be profitable anyways. Like, it was a stress test. We got a stop run set up right below some lows. We had so many stop runs for that day. We had one stop run that went to target, one other stop run that went to target that I probably did not trade because I was not in front of the charts. And then we had this other stop run that eventually went to profit. As you can see, it's a very stupidly boring strategy. This was another, I think this was probably the same setup where I've retried the same stop run after I've seen some signs of strength from buyers. And I probably was a little more generous with the take profit as well, because we went through a very important low. So I decided to retry and open it anyways. And I think on this one, we got rewarded properly. I moved my stop loss to break even, as I often do, as you can see. And we got, I think, to take profit. And slowly but surely, after losing $1,000, we managed to make $1,400 back with a net profit of $450 for that day on this one-up challenge. Here we have another stop run, very beautiful stop run. Look at this, very big increase in volume, very high delta. a lot of imbalances. We opened this trade. I think this one went to profit. Yeah, very beautiful. I even screenshotted it for how beautiful it is. And this was the current state of things in the account. I was not so much in profit. I was like nearly $2,000 in profit. It still didn't update from the last trade. I was around 18% of the profit target after 11 trading days. Kind of slow, not really an amazing performance, but still profitable, and achieved the consistency level that was required. Here we have another stop run, same concept. Look at this one. This one is a very big increase in volume from 300, 169, 1,200. A lot of delta. We're currently short 11 contracts. Let's see how this stop run went. But this one, yeah, this one had some really nice highs that were swept. So we were opening this pretty confidently, I would say. We have some selling pressure, but then, did we get stopped out here? And we got stopped out on this one. Weird. It looked really clean and nice. We almost got filled here, by the way. We literally almost got filled. Look at this. The harsh reality of real trading. Here we opened another stop run. We already took the first take profit, as I can see. We have a $1,000 worth of take profit, but the setup is exactly the same. We wait for the candle to close, short, take profit over here. This is even a more beautiful stop run. The higher the volume, technically, the better. 633, 600, and then 2,000. Big increase in volume, big anomaly. It ran through some very important highs, and because of that, we tried to let one contract run. I think this went to the last contract went to stop loss. We're still on the same one up account. There you go. We opened the trade here. We closed it right there, and that was a very clean stop run setup. Also here you can see a lot of big spike in volume. Beautiful setup. By the way, I posted all of these trades on my Instagram as well. Here we have another trading setup I took on that day, but we're on the New York session. I think tried to trade a divergence here again, but we just took the trade on the test over here. Let's see how this went. This is more of an intraday type of setup. Sales started getting aggressive. I trailed my stop slightly above. This was my last liquidation level. This is an imbalance cluster. And I said, if this is going to be broken, I'd like to get out of this trade. And I think that ultimately happened. So I decided to quit the trade and close with a partial take profit at $1,157 for that day. So this is a quick recap of the situation of this account. Not greatly profitable, I would say, but positive. We had $2,000 worth of profit. It's probably a 1.2 profit factor with a 52% win rate and a slightly positive average risk to reward. This is the equity line of this first phase. And unfortunately, this is when, as you can see here, I have opened a trade and I happened to keep this trade open after market close because it was a bank holiday or some shit. And this is one of the no rules from OneUp. So even though I managed to have a peak profit of around $3,000, I was in a profit of $900 for some reason, probably because I paid a lot of commissions. So not a great profit, but still profitable. So as you can see here, I started texting the customer support, and as the order was not triggered at all, because the markets were closed, I was starting to lose money that I was not supposed to lose. So I immediately texted them, and my Rhythmic Trader Pro login was not working for some reason. Eventually they said that I am no longer eligible for funding since I have traded past 3:15 p.m., which sucks. So I had to restart all over again. And so we started again with a brand new account from OneUp. This is still the divergence setup that I was trading, and I've opened 10 contracts on this one. This is still, this again was a volumetric zone with a volume profile. We were in the standard deviation of the VWAP. There was a clear divergence in the CVD and a great deal of aggression in these candle that led me to open the trade. As always, I kind of trailed my stop loss a little bit, trying to see if that imbalance would have held, and it held it perfectly. Then I started seeing some absorption here. As you can see here, there's this little iceberg over here, but it was completely ran through. Then I basically strangled price with my stop loss, and there you go. The trading stop loss was filled, minus 10 contracts, with a profit for the day of almost $6,000. This was an iceberg order. There was a very clear iceberg here. It was on the same day I took that trade, I think. Look at this one. 1,800 contracts, beautiful iceberg. I've already taken some profits out here, and eventually also this one, this last 3 contracts, let's see if they got filled. Yeah, they got filled. So I increased that profit for that day, $6,400 worth of profit. Here, there was a stop run that eventually went to stop loss. As you can see, I bought here and got stopped out here. But since we then went below some lows, I decided to recover that stop run as soon as I saw some aggressive buying starting to come in. And so I tried to, as quickly as I could, put my stop loss in a safer zone. As you can see, the stop losses here are more heavy because, again, we're in a $250,000 account. So the size has basically doubled. More buyers coming in, buyers finally pushing up, putting the stop loss to break even, and boom, $1,722 in profit. So also the second phase of the challenge started really great. And that was the same. And this was a quick update on the stats for that day. Much better, of course. Still didn't take a lot of stop loss. So this was much better on a profit factor standpoint. This was the equity curve at that point of the first few trades of the second phase of the challenge. And I was already 40% of the profit target on this $250,000 account that I update the page as well. Was very, very positive around this one. The consistency was not there yet because I just started trading. This was the current equity line at that point in time. These was all the profit distribution. And we start again with another stop run. We've already opened a trade during this day that probably went to profit. I see likely an iceberg that we traded here. We're already in profit of $400, plus we had a stop run. So we sold on this stop run and eventually, I think it went to target. Yes, it went to target. We closed this morning alone $1,350 in profit. And this was another iceberg order. This is a very beautiful one. Look at this. With all the indication here, amazing iceberg. Went one, went twice, went 3 times, 4 times. Took out 7 contracts here. We're letting now 4 more contracts run. So $400 more running of profit for these 4 contracts that I decided to let run almost until the VWAP. And in this one, we've actually broken out. First, we broke a level, and then on the test, we've opened the iceberg, which is kind of my favorite type, my favorite way of trading them, to be honest. I think ultimately we reached the final profit target, and boom, $995 with a single iceberg order. Really awesome. Even though the first part of the challenge was kind of challenging, this part started really, really good. So I was very positive we were going to close this with a good profit. But then guess what? Then this thing happened where suddenly Rhythmic Trader Pro disconnected from my platform. And I've then seen a lot of prop firms started having this problem, even Apex, even OneUp, where basically when you're starting to be really profitable, at some point, for some weird reason, the Rhythmic Trader connection to the prop firm somehow does these bugs and basically opens contracts out of nowhere. I didn't open that contract. As you can see in this screen, there is absolutely no trade on the screen, but it says there's 5 contracts open. And I didn't open that trade at all. And as soon as it recovers, look at this. There's an open contract in the middle of nowhere, absolutely no setup, completely crazy. And guess what? We are right before market eventually close. And there you go. Market just closed. I was not able to close this trade on time. And guess what happened? I tried to text to the support. I'm almost there, guys. I'm $6,000. I'm more than $6,000. I'm $9,000 in profit. And I genuinely ask for help. The Rhythmic Trader Pro starts not working. You know what's coming. This is the position you left open. It was open out of nowhere. Apparently, I broke again the rule for a trade that was automatically open in this OneUp account, not by me. Really weird. So I'm no longer eligible for funding. Please tell me this is a fucking joke. So at a 64% of the profit target, $9,000 in profit, after being profitable for the first challenge and the second challenge for some stupid bullshit rule, and from what I believe was a complete scam, I got denied funding once more. So I decided to change the prop firm with the Trading Pit, which was a different prop firm. Now this was a gap fill type of setup that I opened slightly before the New York session was opening. Ultimately, one of them went to break even and the other one as well. And I simply closed the day with a slight loss. This is another trade that I always took, as you can see at the open of the session, on the first standard deviation of the VWAP. As soon as we broke inside, and I had a great run up to $1,000-ish in profit. And at this point, I just decided to...
Sembra un po' quella storia di quella prop che praticamente qualche ora fa ci ha detto: no, non vi possiamo pagare il payout di $15.000 perché avete tradato solo XAU. E ho le prove, prima o poi ve ne parlerò.
To manually close the trade by selling market, and I close the trade like this. Moving on to another trade that I open always at the early stages of the session, again with a divergence on the CVD. I set my take profit on the other side of the VWAP. It started ranging there, then almost got to my target, and then ultimately reached take profit, and closing that day with $1,000 take profit. Here we opened another trade very similarly, the same type of concepts. We see an absorption on the top, on the upper standard standard deviations, then a great reactions from sellers. This one had actually, I think, no CVD divergence. Yeah, we ultimately get stopped out on this one for a loss of $500. Now we're back with the $150,000 account, so the stop losses are smaller. Moving on to the next trade, still the same setup, order flow divergence setup. We are on the bottom standard deviations. Price started consolidating, and I think ultimately we got stopped out on this one. Yes, we got stopped out for a loss of around $1,000. Then I think we reopened the same trade. We took another loss, but ultimately we took this other trade. Then we moved our stop loss below the previous low, so we trailed our stop loss. We waited for our price to reach our target, and up above there we got a squeeze that almost touched, like literally touched our take profit without really taking it, but ultimately it did, and we closed with a $4,000 session, really good session. So this was our dashboard in the trading pit. We requested the upgrade. The account status said under review, and here's the email I got. And then we ultimately received the contract that I had to sign. And as you can see, this is the part that sucks. For the first payout, I could only withdraw $900, which is less than the money I've paid for these entire challenges. It wouldn't even make sense to keep trading just to get a $900 payout. But let's see the stats of the whole challenge. So I exported all of the trades of the first phase of 1UP, the second phase of 1UP, and the final phase in the trading pit. The total wins amounted to $34,000, $50,000 of losses for a profit factor of 2.2, with a positive risk to reward with around a 50% win rate, an average risk of 0.20%, a maximum drawdown of 2.15%, and a gain of 10%. Clearly with a very conservative risk management. Let me zoom out so we can see also the equity line. So over more than 100 trades, I proved that my edge was profitable, which was kind of the whole goal of this challenge. But after trading for 4 months and being profitable, being super careful about risk management, because of some fucking rules, got denied funding multiple times. And with the trading pit, the first profit was also capped at $900, which is fucking ridiculous. So after all of this, I just decided that it doesn't make sense for me to trade futures prop firm anymore. I took a big break from prop firms, but regardless of the funding, I was able to find an edge thanks to order flow. I was able to find a very mechanical edge that you can try and test yourself, as it is based on very simple and replicable patterns. But I've now shifted to options trading, still through order flow and option flow. So I've studied more and realized if you merge option flow and order flow, you can really get the best out of the markets. And I have now a Charles Schwab account, and yep, this is my current dashboard, where I have deposited around $50,000. And if I go to the portfolio performance part, and we go right after this deposit, which was, I think I started trading this early September. So let's go to September 6th. September 6th. Yeah, there you go. This is the current performance. I only put $50,000. It's a forward testing phase, but the return of this style of trading is really, really good, I would say. This forward testing phase, when I'm getting more and more confident with trading options, will last, I think, another 2 months, and then I'm going to start loading more capital inside here. And I will trade this for the next year while documenting the process. So you might want to subscribe to the channel and see me in 1 year from now, and we'll see where this account sits at. In the meantime, I hope you try the strategy. Let me know what you think. For this video, it's all. Now fuck off.
Aura, mi dispiace, figa, che sbatta. Poi le persone stanno lì a dire... No, le prop futures sono il futuro. Dipende sempre dal punto di vista. Però Aura, mi piace. Io non vedo l'ora di vedere deep charts, onestamente.